The Federal Reserve has been in the news a lot recently, and we thought it might be helpful to get structured the way it is. 1.
It oversees and regulates all bank holding companies and about 800 state-chartered banks who've chosen to join the Federal Reserve System, with fusions to make sure they're healthy.
2. The Fed borrow from each other, or when you write a check from your bank.
For purchasing. Acts as the government's bank.
Which means it processes checks written by the government and holds government deposit securities like treasury bills, bonds, or notes to raise cash.
It turns to the Fed to get the loans to banks directly through its discount window.
And banks usually don't go to the discount window unless they're having trouble finding a loan elsewhere because the discount rate is generally higher than market rates.
And that's intentional. It's kept higher to encourage banks to borrow in the markets to keep the markets in the Fed's open market committee formulate and execute monetary policy.
What does that mean?
Characters called participants of the Federal Open Market Committee, or FOMC for short.
He's probably not your best friend or anything, but chances are you've heard his name. Ben Bernanke.
Chairman of the Federal Reserve.
Members of the Federal Reserve Board of Governors, who reside in Washington with Ben and like Ben, are nominated by the President of the United States and confirmed by the Senate.
Each board member is an independent policymaker with an evidence of the 12 independent Federal Reserve banks scattered across New York.
So there's our cast of characters, our FDU. A lot of things, but in terms of
Each member is constantly gathering a bunch of data
about how the economy is performing in general, and in his or her part of the country, if they're one of those here at the Federal Reserve Bank of Cleveland.
Our president is constantly poring over economic data with our researchers, insight, and analysis, and she and a few of her colleagues bring it all with them to Washington, D.C.
together with
Ben Bernanke.
and the rest of the Board of Governors in Washington around this really big mahogany table.
They present everything they have, this representation of the economic picture from across the land.
And it's used by voting members of the FOMC to...
Not everyone who participates in the FOMC meeting votes at every meeting. All members provide input, but the only chairman, Ben Bernanke, the president of the meeting,
Terms, so they all get to vote eventually.
Okay, let's explain what that involves.
and more attractive for banks to borrow money, 5%. And then the rate gets lowered to 4%. Since it costs you less now that are looking to borrow money to buy a new car, or a house, or a college education, or you can make loans to businesses looking to buy equipment or raw materials or buildings, and all people tend to buy more things. And when there are more people buying more things, businesses that want to keep up with the increased demand, may have to pay more for borrowed money. Let's say they were able to borrow money at 4%, now they would have to loan money out at a rate higher than 5%. And people may decide, I don't want to borrow at those higher rates, so overall...
Borrow down, that generally means people are spending less money, and if people spend less, demand for products and services tends to go
down.
If demand goes down, the general price of goods and services tends to rise more
slowly.
And that keeps inflation at bay, since inflation is a measure of a rise in the general price of goods.
Recently, this raising and lowering of the federal funds rate was the Fed's main tool for implementing monetary policy.
But when the financial crisis hit and the economy continued to falter, even after the Fed funds rate was dropped to essentially zero,
They decided to make short-term loans available to financial institutions that couldn't find loans in the market.
Of these special programs employed, that takes some time for these actions to have an
The Federal Reserve is set up to be independent, part of the government, but separate from it.
Decisions by nature are whether to
heat or cool the economy.
Get off a boom to get reelected.
In short term, but in the long term, they could leave behind
inflate checks and balances, and can't serve in these important long-term decisions of the board. At the same time, the Reserve is flexible enough to act quickly to provide access. In times of crisis, it can help prevent the economy from
falling off financial support of banks or government by trouble hit. Many banks crashed and turned a lot of business.
Banks located.
But monetary policy is being considered.
It's probably good to know how the Fed works.
we thought it might be helpful.
Something to think about. controversial on the drawing board.